talking about oil coming, we're talking about doing so many things. And Ghana, we can raise the money ourselves, within ourselves, and do it. Always looking outside. For how long can we do that? We should move.
The advent of oil has set the stage for massive economic growth, and the market is rich with opportunity. But the question is, are banks up to the task? It's early days, and already the financial sector is under stress, a cause of great concern for the Bank of Ghana. Kofi Amwewa explains why.
As we speak, you have a situation where a lot of the capital of banks are tied into non-performing loans. If you take a company like Tor owes about 8 banks. If Tor goes down today, and those 8 big banks go down, that's the end of the financial system.
Dr. Samuel Ninoy Ashong, Dean of the Gimpa Public Services School, agrees.
You need a banking system which is efficient, well-capitalized, broad-based, which will be in the position to be able to provide the resources for development. Money is only meaningful when it is doing its job, and its job is financing businesses.
The minimum capital base of banks was set at 7 million cedis, clearly too low. And in 2007, the Bank of Ghana called for banks to recapitalize. The new benchmark was set at 60 million cedis, a target that all banks had to reach by 2010. Local banks were quick to object. Edward Afa, CEO of Fidelity Bank, explains why.
Certainly, there's no question about the fact that we all needed more capital to increase our capacity to do business. The initial proposal we found something wrong with because we thought the time frame was far too short. And when you're under such pressure, you're bound to make mistakes.
Government relented and gave them more time. While the deadline for foreign banks remained the same, local banks now had to raise only 25 million by 2010 and bring it up to 60 million by 2012. According to economist Dr. Sam Mensah, giving them breathing space was an error.
When you slow down the process like that, every bank tries to find a white knight or efficient, friendly investor to come and put money into their bank so that they will continue to be independent rather than consolidating with another bank.
There are currently 26 banks operating in Ghana. The point of the recapitalization exercise, he says, should be to not only strengthen banks, but to reduce their numbers by encouraging mergers. Ghana, he says, has too many small and inefficient banks, a direct cause of the high cost of money that's currently hampering development.
First of all, your expenses are too high for your size, and therefore you need to operate on a very wide margin to be able to cover your expenses and be profitable. It's very difficult for a small bank to compete with, let's say, Barclays or Stanchart because they are more efficient, they are bigger, their costs are lower. Barclays was the first bank to reduce its rates, its base rate to 18%, and that indicates size. They can leverage on their size. So now we still have 26 banks, and everybody meets the capital requirement without a growth in the business to justify that capital.
And instead of opting for mergers, the majority of banks have sought foreign investors in order to meet the target. But at what cost?
I think by the time this whole exercise is over, we'd be lucky if we found, more than a handful of banks which are still majority Ghanaian owned.
Edward Afa, Fidelity Bank, defends the industry.
I don't see the benefits of merging immediately because at the end of the day, what are you merging for? If you put 2 weak institutions together, you get a very big weak institution.
CEO of UT Bank, Prince Kofi Amwewa.
I will not consider a merger simply because there are no banks out there to merge with, which have the same ideals and same approach to doing business.
You've got to look at the cultures of institutions, you've got to look at your independent strategies, you've got to look at your technology, you've got to look at a whole lot of things to say whether merging is beneficial.
The key objective of the recapitalization was to make sure that our banks are well resourced well capitalized, to be able to modernize their operations in line with modern trends.
You need the systems, you need the resources, you need the risk management expertise to roll out loan products. You need so much more.
All local banks now have a substantially increased capital base. So what's...
I'm afraid not much. We've not gone beyond a banking system that is operating on a spread, one of the widest spreads in the world. We've not gotten into a banking system that is providing medium to long-term loans. We still have a banking system that basically provides only short-term financing. We've not gotten a banking system that lends on the basis of cash flows as opposed to collateral.
We want to see more responsible banking. Banks should be doing more than they are doing now. Banks should be more innovative. The customers are not happy. Bank of Ghana is engaging banks on the high spreads. The difference between lending rates and the average cost of deposit, the spread is too high.
And by its own admission, despite the recapitalization exercise, banks are still too small.
The capital of banks is too small. In today's terms, if you lift crude, one consignment, you're talking about 60, 70, 80 million dollars. I don't know, depending on where it comes from. Can you imagine that? I mean, a bank has a capital of what, 40 something million dollars, and then one consignment of crude is $60 million. How are you going to do it? So syndication, fine. So the banks are able to talk to each other, take bits of it and so on. They're able to raise that kind of money to get crude oil into the country. What we are saying is that the 60 million, is still too small.
Listen to Kweku Awoche, CEO of the VRA. To fire its thermal plants, the company has to regularly buy crude oil, and raising the capital to do it is difficult.
Our parcels of crude oil, depending on the price of crude oil, run between $30 to $50 million a month. And so that means we go out to the local banks. We typically take out letters of credit, and oftentimes we have to go to several banks to get that business done. But most banks in Ghana cannot give us a $50 million line of credit.
If a bank has 60 million, all he can borrow you is possibly, to a single obrigo, is about 25% of it. And what's 25% of 60 million? 50 million, then that's the end. And you are doing a business of $200-300 million. We get 60 million as a bank and we sit and we are happy. I don't think so.
Property developer Emmanuel Boche is a frustrated...
First loan we got was $1 million. From 1 million, we moved to 2 million. Some 20 years ago, even the bank to give you 1 million is a problem. So I'm saying that let's continue going. Today, we're looking for banks to give us 50, 100, 200 million. We have projects like that. But no banks will give us, so they are telling you, stay within our pace of growth. So growth is limited.
Do you want big banks? For what? Maybe if they are big, they are going to be able to, one of them can do big loans. But you can achieve that same purpose with efficient, medium-sized banks if they can do syndication.
But in the experience of Emmanuel Boche, syndication of loans between banks is fraught with...
For instance, there are other projects that we give it to a particular bank and another project, another bank, but then you find out the bank does not even want to do a pari passu sharing of the guarantees or the collateral that you have to put in place. Every bank wants to be a king of its own, and that's very difficult to work with. The private bankers should be bold to come together and say, this is what we want to do. We want to look different. We want to match the international market. We should start becoming billionaires in this country. The banks can take the lead.
But without support from the government, that's difficult to do, says Edward.
Government needs to give Ghanaian banks leadership. and responsibility. We have seen innovative schemes in Nigeria and Southern Africa where they appoint a local bank, or in the bidding process, they say that it must be a joint venture between a local bank and an international bank. And if the mandate is juicy enough, the international bank will find a suitable local bank to partner with. And in that process, you see the building up of capacity, you see the transfer of skills, and that would help. But we need a strategic approach to some of these things.
I think one thing that the government can do, put Ghanaian money into Ghanaian banks. I mean, all the ministries' monies, all these funds that are created are in foreign banks. I don't know whether it's because they feel safe there or because it's been a tradition. I mean, UT hasn't got one government agency account, and I don't even go for it. And it's sad because it's not that I want a UT. It should be with Ghanaian banks, and you put our money there so that they earn interest and Ghanaian banks can grow. But what we find is that they're used to the foreign banks and they keep the money there. And we have to compete for the crumbs, as it were.
The issue of international banks is a touchy one. Of the 26 banks operating in Ghana, 14 of them are foreign-owned and together control the vast majority of business in the financial sector. Prince Amabing of UT Bank picks up the story.
If some outsiders control your banking sector, they control your economy. And I would love and wish that Ghanaians would control the banking sector, at least a good portion of it. But as it is, I don't think we control even 10%, pure Ghanaian banks. Telecoms are in the foreign hands. Oil certainly has to go in the foreign hands. Mining is in foreign hands. Banking is in foreign hands. We have to start owning part of the economy ourselves. The thing about these foreign companies is that when they go and get stuff, all the capital will go away. And they only stay in the country and repatriate profits and dividends. If you look at the investment they're making in this country, it's pathetic. They're paltry. They've made so much money, they don't even build offices, they rent.
There is I think some people call the velocity of money in a community. When it's foreign, it comes in and it leaves within a fairly short time frame. If it's locally sourced, the likelihood, or the thinking at least, is that it will stay within that community and it will get spent and respent in that community. And you want that.
You need to empower Ghanaians slowly so that they can actually take part in various sectors of this economy. If we don't, then if we get into any crisis, these foreigners will just pack a bag and baggage and leave.
I have to say, can you depend solely on foreign sourcing? I don't think so. It has to be some balance where you recognize, the power of foreign investment, but you at the same time trying to encourage local investment and saving and development.
But let's look at the facts. Foreign banks and the capital they can leverage are essential to Ghana. Without them, for example, there will be no way of lifting the oil from the Jubilee field. The giant FPSO alone cost $1 billion to build. And operating an oil rig costs over $1 million a day. And that's not to speak of infrastructure. Government borrows billions of dollars every year from foreign banks to finance roads, bridges, hospitals. Money that is simply not available from local banks. A point Mr. Mwabing concedes.
To grow certain sectors, especially where you don't have the might. But eventually, you want to be in control of the economy in the long run. So I'm not saying out with them, but I'm saying as we invite them in, we should put regulation to make sure that they don't dominate the whole thing and then cut off our own Ghanaians. You don't do that in your own country. Your country people must have some dispensations.
Again, let's look at the facts. In many countries around the world, foreign banks operate under strict regulations, confining them to specific areas of business, like trade or project. This is not the case in Ghana, where foreign banks have open access to all aspects.
Ghana is in a very peculiar situation where, unlike most countries, whether you look in the United Kingdom, Germany, the United States of America, Israel, Canada, South Africa, domestic banking are those banks which have control over domestic deposits. In most countries, the majority of those deposits are in the hands of domestic banks, not foreign banks.
Which is not the case here. Domestic banking too is dominated.
At the moment, if you look on the Spintex Road, on Osu High Street, they're probably in a stretch of half a mile, you get like 15 banks. And that is not good.
But why, says Dr. Samuel?
That if the foreign bank, the so-called foreign banks, have been able to amass deposits, it tells you that our local banks were not up to the task. No. These people go to door. They started cashless banking so that you go and open an account with no money. Later on, you come and deposit. These are all innovations. Hitherto, it was uncommon to see banks giving car loans to individuals. Now it's commonplace. Now, the mortgage financing, it was typically only HFC. Now every bank gives mortgage financing, so far as you can pay for it. So all these things go to make a vibrant financial system.
But there's more to domestic banking than innovation, says Kwekwa.
Like so many things, one needs a balance. I think that the danger of having everything owned by foreigners is that you have very little control of what happens within the country. If I'm sitting outside of this country, I evaluate the risk of lending far differently from if I sit in the country and I know what's going on and I know what institutions are at work. And I think if that's the case, there won't be much lending if we depend completely on the foreign banks.
When you have control of the domestic deposits, the deposits in the market, you're leaving the allocation of resources in the country to a foreigner quite often living in London or South Africa who doesn't understand the local terrain. So what will that foreigner do with the local deposits they control? They will decide that let's fund multinationals only because they're more comfortable with Unilever and Nestle and the large corporates. Will they take a risk on an SME Ghanaian down the road who is a cocoa farmer or a Ghanaian who wants to get into cocoa processing or get into housing or what have you? And I think the evidence is very clear that over the last 50 years since independence, who has really supported Ghanaian entrepreneurs and supported the agricultural sector and supported local business? And what comes to mind are the NIBs and the ADBs and the GCBs. And they've done certainly a far better job and investment in investing in local capacity than the multinational banks.
Which begs the question, why then are foreign banks?
It comes back to fiscal management. A lot of us don't pay taxes. You know, you'll be amazed to know, 18%, 20-something% of the workforce, pay taxes. That's too low. That's too low. The consequence is that government is not able to raise the fiscal revenues that government needs to raise.
Okay. With the result that government is dependent on donors, the IMF and the World Bank, who lend only on condition of an unregulated...
So because of the economic structure that we have, and because of the dependence on these donor partners and so on, a lot of the policy is driven by some of these concerns. So in essence, we have deregulated. As we speak, there's nothing in the law that compels us to force banks to do anything.
Until government is able to generate sufficient funds of its own, the Bank of Ghana is not at liberty to regulate banks, foreign or otherwise. The solution lies in more banks, not less.
Close to 70% of the population, they don't have a bank account, So that's an issue. We have a situation where more than 60% of currency in circulation are outside the banking system. We want to see more banks come in and help government, help Bank of Ghana mop these excess liquidity and so on, bring them into the system so we can do sound financial intermediation. In essence, we need more banks.
One has to walk before you run. We need those local banks. We need to build capacity in those areas. As equally as we need banks who can compete for $50 million lines of credit. In my view, there is space for everybody in that. Yes, we may not have enough banks that can give $50 million lines of credit, but the economy won't be transformed just by those banks.
And so the debate comes full circle. Are banks too small? Yes and no. Do we have too many banks? Yes and no. And where do foreign banks fit into the future of Ghana? It's a little confusing, and not just...
Sometimes, as a head of a bank in Ghana, you're not sure whether there is a strategic plan for the banking sector in Ghana, and how many banks does the government want in the country? How many of them should be foreign banks? How many of them should be local banks? What business should the foreign banks coming into the country be doing vis-a-vis the local banks or those who are currently in the system? There's a need for very clear strategic thinking as to what is priority, what is policy on many of these issues.
Pragmatism but in the middle of all this, pockets of pragmatism prevail. Let's just get on with it.
We are growing. In the next 10 years, this country, probably the population will be 30, 35. Where are we keeping them? How are we feeding them? How are we going to do things? These are the things that we should talk about and move. We cannot stay where we are forever. And I'm saying that let's start running. Let's start doing things. Let's stop talking and work.